Budgetary control MCQs. Well, a quick revision. Since you are all strong in budget, am I right? Physical budget, cost budget, finance budget, and profits budgets are called A. Master budget, B. Functional budget, C. Basic budget, and D. Current budget. So what is the answer? Sure. Good. So the answer is functional budget. B adagana. Saru, new admission amma. Welcome. Renuva Charla Durga Devi. Welcome. Our nature. Muruga. Raw material consumption, raw material purchase budget, and manpower requirement budgets are called financial budget, cost budget, profit budget, and physical budget. Physical budget. Very good. Cash budget, expenditure budgets, and budgeted balance sheets are financial budget, cost budget, profit budget, and physical budget. Financial budget. The sales revenue budget will come under financial budget, cost budget, profit budget, and physical budget. Profit budget. On the base of capacity, budget can be classified as master and functional budget, fixed and variable flexible budget, master and current budget, long-term and short-term budget. Based on capacity, it comes under one fixed and flexible budget. Next. Which of the following is known as rigid budget? Master budget, functional budget, fixed budget, long-term budget. Fixed budget is known as rigid budget. A financial budget which can be recognized as a difference between fixed cost, variable cost, and variable cost is designed to, in relation to the level of activity attained, is known as master budget, functional budget, current budget, flexible budget. In flexible budget only, we are going to classify fixed cost, variable cost, and variable cost and all. Okay. Next, it's a collection of documents that contain key information for those involved in planning process of budget. Key information with respect to planning process. Okay, comes under budget manual, budget document, basic budget, master budget. What is the answer? Budget manual. I am watching, physically present, mentally absent. Okay, mental, listen here. Budget manual budget manual includes objectives and benefits of budgetary control system, timetable for preparation of each budget, follow procedure, all of the above. All of the above. ரொம்ப கெட்ட பண்ணுவார்கள் அந்த क्वेश्चंस மனப்பாடம் வச்சிருக்கீங்க. Then all the activities of firm are evaluated from the base is current budget, functional budget, zero based budget, and traditional budget. Only in zero based budget, from the base we are going to, from the scratch or from the base we are going to do the prepare the budget. Which of the following statement is incorrect for zero-based budget. B la sollama. Activities are evaluated from the scratch. The functions of department should not be divided into various activities. Division packages are evaluated and ranked by cost benefit analysis. Resources are allocated based on the rank. Which one is not correct? B. So not divided, they said. Right? They will divide. Good. B is the correct answer. Which of the following statement is incorrect? A. Traditional budgets are prepared annually, whereas zero-based budgets are prepared 3 to 5 years. Correct statement. Starting point for the traditional budget is last year budget, whereas zero-based budget is 0. That is also correct. Alternatives are considered in traditional budget, whereas ignored in zero-based budget. No, ulta. Alternatives not considered in traditional, whereas in zero-based budget will consider. So C is not correct. D. Minimum preparation time required for the traditional budget, whereas substantial time for zero-based budgets. Correct. So C is incorrect. Production budget should be computed based on opening stock. It's a format only. Opening stock plus purchase minus closing stock, or sales plus closing stock minus opening stock, or sales plus opening stock minus closing stock, sales plus closing stock minus opening stock, closing stock plus purchase plus opening stock. So what is the format for the production budget? Sales plus closing stock of finished goods minus opening stock of finished goods. Good. Next. If the company wishes to establish a factory overhead budget system in which estimated cost can be derived directly from the estimated activity level, it should be prepared as master budget, cash budget, flexible budget, fixed budget. I'll repeat once again. If a company wishes to establish a factory overhead budget system in which estimated cost can be derived directly from the estimated activity level, then which budgets is supposed to prepare? Master, cash, fixed, flexible. Have to prepare flexible budget. In flexible budget only, depending upon the activity, the cost also they are going to. The classification of fixed and variable cost is usually for the preparation of master budget, flexible budget, cash, or capital budget. Already we discussed it. Where we will classify the cost into fixed, variable, semi-variable. Same question they're asking. Classification of fixed and variable cost is useful for the preparation of dash budget. Again, flexible budget only. So difference between fixed and flexible budget is a very frequently asked question. Master and functional budget also frequently asked question. Budget manual also frequently asked question. Zero-based budget also frequently asked question. Difference between traditional to zero also you have to study. Budget manual is a document which contain different types of budget to be formulated only. B, which contain the details about the standard cost and the procedures to be made. C, set out the budget organization and the procedure for preparing a budget, including fixation of responsibility, formalities, and records required for the purpose of preparation of budget and for exercising budgetary control system. None of the above. So this direct question with respect to what? Budget manual. The definition of the budget manual. What purpose the budget manual is there? C is the correct answer. Okay. Next. The budget control organization is usually headed by the top of the executive, who is known as, who is what? Formulate the budget. Who is the top person in the budgetary control system? General manager, budget director, budget controller, accounts of the organization, accountant of the organization, none of the above. Budget directed or controlled. All India level goes to Dinisha only, it seems. In examination for Dinisha, no need to do the question paper. She'll write the question as well as answer. That's the capacity. Next. Durga, don't get. A favorable budget variance is always an indication of efficient performance. Do you agree? Give reason. Favorable budget knowledge only for efficiency in Solva. Do you agree or not? For that, a favorable variance indicate savings on the part of the organization. Hence, it indicates efficient performance of the organization. It's the first one. B. Under all situations, a favorable variance of an organization speaks about its efficient performance. C. A favorable variance does not necessarily indicate efficient performance because such a variance might have been arrived at by not carrying out the expenses mentioned in the budget. And D, none of the above. What would be the answer? Shall I read out the answer or comfortable? Shall I read the answer again? Favorable variance, favorable budget. What is favorable budget? You have to give the reason. Favorable budget represent, it indicates savings on the part of the organization. Favorable. Hence, it indicates efficient performance of the organization. This is correct. Second one. Under all situations, favorable variance of an organization speak about its efficient performance. This also seems to be correct. Okay. D. C. A favorable variance does not necessarily indicate efficient performance. Because such a variance might have been arrived at by not carrying out the expenses mentioned in the budget. 5 lakhs budget. If I incurred only 4 lakhs, favorable only. But few expenses, few commitment now fulfill, then favorable is not the correct one. Right or not? I have to execute 5 works. For that, they allotted 5 lakhs. Clear? I execute only 3 works. Total expenses 4 lakhs. Amount wise 5 lakhs minus 4 lakhs favorable, but remaining 2 more work may be pending. Right or not? Therefore, it may not always correct. That is what argument. So, what is the right answer? C is the correct answer. Right? In general, favorable only, but we have to what? Do the controlling mechanism, whether correct or not, whether they executed all the work or not. Fully common sense only. Manageable, Gana? Next. A budget report is prepared on the principles of expectation and thus A. Only unfavorable variance should be shown. In budget report, only unfavorable variance alone should be shown. B. Only favorable variance should be shown. Both favorable and unfavorable variance should be shown. None of the above. You have to express both favorable and unfavorable variance. Purchase budget and material budgets are. Purchases budget and materials budgets are. Option A. Purchase budget is a budget which includes only the details of all materials purchased. Correct, Mari? B. Purchase budget is a wider concept and thus includes not only purchase of material but also other items as well. Purchase raw material, other than raw material also will be there. C. Purchase budget is the different from material budgets. It includes purchase of other items only. Purchase budget. Purchase budget is not material. Other than material only called purchase budget. That is not correct. Right? And D, none of the above. If now the conflict between A and B alone. Only purchase raw material alone, raw material and other items also. Raw materials and other items also, whatever we are buying, that is also form part of purchase budget. Understood? Efficiency ratio is A, the extent of actual working days avoided during the budgeted period. B, activity ratio divided by capacity ratio. C, whether the activity ratio is more or less than the budgeted activity. D, none of the above. Formula, activity ratio divided by capacity ratio, say efficiency ratio. Then, activity ratio depicts, it represents what in Gekram? A, whether actual capacity utilized exceeds or falls short of the budgeted capacity. B, whether the actual hours used for actual production were more or less than the standard hours. C, whether actual activity was more or less than budgeted capacity. None of the above. Shall I repeat once again or what? I'll repeat. What is activity ratio? I'll represent what? First one, whether actual capacity utilized exceeds or falls short of the budgeted capacity. The second one, whether the actual hours used for the actual production were more or less than the standard hours. C, whether actual activities were more or less than the budgeted capacity. And C, none of the above. Already we discussed in the previous question itself. It's comparing with the capacity only, right or not near hours. Therefore, what is the answer? C is the correct answer. Which of the following is usually short-term budget? Capital expenditure budget, research and development budget, cash budget, sales budget. Cash budget is a short-term budget. So, happy? Good.